Have you ever wondered about the current state of the financial market? It's a question that's on the minds of many, especially in these uncertain times. The financial landscape is complex, dynamic, and is influenced by a myriad of factors. Currently, we are witnessing high market valuations, a scenario that has caught the attention of the European Securities and Markets Authority. They've issued a warning, suggesting that financial markets, which are at or above pre-pandemic levels, could experience significant corrections. This is indeed a matter of concern, and it's essential to understand what this could mean for investors. Risk-taking is on the rise in various asset classes. Corporate bonds, stocks, and even the relatively new crypto assets are all witnessing this trend. This increased risk-taking is a reflection of the current market optimism, but it also exposes investors to potential losses. The surge in retail trading is another notable trend. Driven by online platforms that offer zero-commission models and gamified features, a new breed of retail traders has emerged. This trend, while democratizing investing, also raises questions about investor protection. Trading is not just influenced by economic indicators and company performance anymore. Social media and online message boards are now key players, driving trading decisions and shaping market trends. This new landscape, while exciting, also brings with it a new set of challenges and risks. The financial market is a complex and dynamic entity, and understanding its current state can help investors make informed decisions. What do experts say about the future of the financial market? Their insights and predictions can be crucial for investors. Let's dive into what some of these experts are saying, notably Jeremy Grantham, the famed investor and co-founder of GMO. He's sounded an alarm bell, warning of a major bubble in financial markets that's on the brink of bursting. According to Grantham, the recent upheavals in the banking sector are just the tip of the iceberg. He predicts steep declines in US stocks, with potential drops ranging from 27% to over 50%. This, he believes, could plunge us into an economic downturn. In contrast, analysts at Bank of America, Goldman Sachs, and Morgan Stanley offer a more optimistic outlook, suggesting a less dramatic scenario. Yet it's crucial to note that Grantham's warnings aren't baseless. He's drawing parallels with the dot-com crash of the early 2000s and the financial crisis in 2008, suggesting history might be on the verge of repeating itself. Grantham's concerns extend beyond the stock market. He sees simultaneous bubbles in both the stock and real estate markets, a phenomenon reminiscent of the economic landscape in Japan in the 1990s. He points an accusing finger at central bankers, blaming them for artificially inflating the value of financial assets. He advocates for higher interest rates, echoing the moves of Paul Volcker, the former chairman of the Federal Reserve. But Grantham's predictions aren't solely focused on the immediate future. He's also looking at long-term trends, such as climate change and aging populations, which he believes could sustain inflation for years to come. Expert opinions and predictions can be a helpful guide, but they're not infallible. Investors should always consider a range of perspectives before making decisions. So, what are the main points to take away from our discussion on the current state of the financial market? Firstly, it's important to recognize that the market is currently at or above pre-pandemic levels, and there's a potential for a significant correction. Risk-taking is on the rise, especially in corporate bonds, stocks, and crypto assets, a trend that's being fueled by online platforms with zero-commission models and gamified features. The surge in trading driven by social media and online message boards also poses risks and raises concerns about investor protection. Secondly, we've heard contrasting expert opinions and predictions. Some warn of a looming bubble burst and an impending economic downturn, while others offer more optimistic forecasts. Differing views are to be expected in such a volatile environment, and it's essential to consider a range of perspectives before making any investment decisions. Lastly, long-term trends, such as climate change and aging populations, can significantly impact market dynamics. These factors could potentially prop up inflation for years to come, and there's something every investor should take into consideration. Understanding the financial market is no easy task, but being informed can help investors navigate this complex landscape. Remember, investing should always be a thoughtful and calculated decision.